Black Trading. Today we're going to talk about market sentiment. And what do we mean by market sentiment is overall market sentiment, right? So if you're trading, just for example, an AUD USD, a Euro USD, British Pound USD, NZD USD, the main things you are going to want to know when trading like these pairs is what is the Dixie doing? What direction is the Dixie heading, right? Because what the Dixie does is going to be the opposite of what you see on AUD USD. So if Dixie's going down, AUD USD is going up, right? So you may be wondering, like, what affects Dixie, right? These things include inflation rates, interest rates. Dixie has been going down just due to dovish comments, right? Dovish comments talking about cutting interest rates. This gives investors, traders, like institutions, like less incentive to buy U.S. dollar, right? Because that means U.S. dollar strength compared to other currency is not going to be as strong, right? So we've seen the value of U.S. dollar just from what we can see here. It's dropped from 112 to around the $100 point range, right? This is all due to the fact that right now with the monetary policy, there's a monetary policy divergence, right? So we're going to see potential rate cuts because of the dovish comments they've said and all that. This isn't for sure. This is all speculation, just off what has been said in meetings and all these different things, right? So, like I said, trading U.S. dollar, any pair, especially like an AUD, USD, Euro, USD, like again, Dixie's going down, those pairs are going up, right? So you may be seeing you may see that all these different charts do not look the same, like Euro USD, AUD USD. These different pairs do not look the same on the charts, right? But they all have all the same overall sentiment, whether that be bullish, bearish, right, or it's consolidating or whatever, right? So when you're keeping that in mind and looking for trades, right, when you're looking to put on a GU trade, an AU trade, look at the overall sentiment of what's going on in all those pairs. Are all those pairs bullish? Are all those pairs bearish? And from there, you can have a better understanding of what's going to happen next. Of course, you can't predict what markets are going to do. You can never predict these things, but you can put yourself in position to make good trades, right? To put yourself in a position to have a good loss, right? There are good and bad losses according to your trading plan, correct? So just for me personally, I'm on an AU trade right now. I did catch this this very. We'll just go to the 1 month. I caught the PMI trade because if you understand the technicals, you understand how these markets actually work. Trading them is a bit easier, right? So just here, like I knew if if PMI came out not so great, which it did not, that there were orders in this 0.664 range. We saw this bounce over here, so I knew that we would get another bounce over here. So I put a buy limit in, right? Knowing how news reacts to different demand zones or supply zones or support and resistance zones, they're all the same thing, right? It's just an area that people buy at, an area people sell at. So knowing that, you knew that we were going to get a big wick. Of course, we don't know these things, but you can assume that you're going to get a big wick with a big rejection. Um, I'm in this trade. I know we're in a current downtrend, but I do think this is in a Wyckoff schematic that we came from the selling climax, that we're now in the automatic rally, right? So now we're just waiting for this trade to play out, right? We are at a break even on this trade. We took partials. So we locked in profits, and now what we're gonna do is just trail the stop loss under the most recent low of the high, and we're just gonna see how far we can ride it up, and just lock in small profits or big profits depending how the trade goes, right? Um, just because I'm in this long, kind of more of a long-term trade because of my position in the trade, like I got in on the wick, I can stay in this trade longer, right? So currently, I got into another position. It's a 1-4 right here, or yeah, 1-4 basically. I know that because of the PMI, because it's bad news, that we could see a market shift. So why not position myself in a lower time frame for a higher RR, right? Because when you have 10 pip stop loss, you will get, and you're going for 50 pips, you have a 1-5, right? So if you're risking 1% on a $100,000 account, that's $5,000, right? And you're only risking a grand. So on this one was a 20 pip stop loss because I knew it was going to be very volatile. So it's a different type of RR, right? So it's not going to be as great. On this longer term trade, we're looking for like the most recent high. We're looking for that build back up before we get better information on inflation, right? Interest rates, year-on-year inflation, because these are the things that move the markets. This is what gives overall sentiment to the market, knowing how well a currency is doing, like investors. And when I mean investors, I'm talking offshore investors, not Americans. All Americans use U.S. dollars. So foreign investors are looking for a currency, maybe a bond, a stock that is gonna not let their currency depreciate over time, right? So today I just wanted to talk about how fundamentals is the groundwork to how markets move. Currencies like U.S. dollar are extremely uh, liquid, like just the market. Um, so yeah, that's all we wanted to talk about today, and we will go over something. Maybe what we'll go into Wyckoff next time deeper. Um, whatever comes to fruition. All right, see ya.